You're listening to the Financial Source podcast on YouTube.
Okay, let's unpack this. Because if you've been watching the news, you know the financial world is basically spinning off its axis right now.
Yeah, it really is a chaotic start to the week. I mean, we're witnessing a real-time constitutional tug-of-war
Between judicial rulings and executive trade policy. And the markets are just struggling to figure out who actually holds the power.
Right. The uncertainty is palpable.
So for today's deep dive, we're looking at this tangled web of tariffs, the ripple effects on your money from the euro to the yen, and, a very strange geopolitical twist in the oil market.
Plus, we have NVIDIA waiting in the wings to tell us if the AI party is still on.
It's a heavy slate. So let's start with the catalyst, the Supreme Court ruling.
Right, so SCOTUS struck down the president's use of IEEPA.
The International Emergency Economic Powers Act.
Exactly. Basically, they ruled he can't just use national emergency powers to set these specific trade barriers whenever he wants.
Which you'd think the market would cheer for a win for free trade, but the reaction was volatile.
Because the administration didn't just accept the ruling, they circumvented it. President Trump immediately announced a global flat-rate tariff.
The logic being, if he can't target specific countries under IEEPA without legal hurdles, he'll just tax everyone.
Right. Initially 10% and then quickly bumped to 15%.
Which creates a massive amount of uncertainty. I mean, the president even noted that refunds on the old, now legally void tariffs are unclear and could be tied up in litigation for years.
Markets hate uncertainty, and the U.S. dollar is taking the hit. The DXY is down 0.4% because traders just don't know what the rules are anymore.
So capital is flowing into the euro, which reclaimed the 1.18 level. But if you look closer, there is a fascinating split in Europe regarding this new flat tax.
It's the classic good cop, bad cop routine. You have German Chancellor Merz actually sounding optimistic.
He's probably doing the math and realizing a flat 15% is painful, but it's a lot better than the threat of a targeted 50% tariff on German automakers.
But France sees it differently. Their trade minister, Forestier, is already talking about retaliation tools. They're worried about luxury goods and agriculture, where margins are tighter.
And the UK is in an even tougher spot. They thought they were safe because they had previously negotiated a special 10% bilateral tariff deal.
But this new executive action seems to blow that out of the water. That's the danger of executive orders versus treaties.
Right. The new global flat rate overrides that previous handshake deal.
Exactly. The UK effectively loses its special status, which is why the pound is capped at 1.35.
Japan isn't faring much better either. The LDP tax chief, Onodera, called the situation a real mess.
The yen retreated beneath 155. It was a holiday, the emperor's birthday, so trading was thin, but the sentiment is clearly bearish.
When you have this much confusion, money looks for a bunker. Gold has surged over 1%, climbing back above $5,100 an ounce.
That is pure safe haven appeal. But here is where it gets really interesting. Copper isn't tanking, it's actually holding gains, up 0.2%.
Which is strange, because usually tariffs kill industrial demand.
That's the anomaly. The market seems to think this flat 15% rate actually benefits major exporters like China and Brazil compared to the previous system.
Because that old system targeted them more aggressively, so it's a relative win for them.
Precisely.
Speaking of anomalies, let's look at oil. WTI is down nearly 1% despite all the chaos. And that's because there are reports of U.S.-Iran talks resuming.
It's a very surprising geopolitical twist. While the trade war rages, Iranian officials are suggesting an interim agreement is possible.
The report even suggested U.S. companies could participate as contractors in Iran's oil fields. That sounds incredibly unlikely given the current political climate in Washington.
It does seem far-fetched, but the market is reacting to the mere possibility of Iranian supply coming back online. That potential glut is pushing prices down.
So money is hiding in gold, speculating on copper, and fleeing oil. But not everyone is playing defense.
Right. All eyes are shifting to the one stock that's arguably holding up the entire growth narrative, NVIDIA.
The bellwether. Their upcoming results are the litmus test for global AI demand.
If they miss, or even just don't beat expectations by a wide enough margin, it could dampen the mood across the entire tech sector.
And we've got a massive data dump coming too. U.S. producer prices, housing data, consumer prices from Germany and France, plus GDP numbers from Canada and India.
Plus, the People's Bank of China is setting prime rates as they return from the Lunar New Year. It is going to be a pivotal week.
So what does this all mean for you? We are at a messy intersection where judicial rulings are colliding with trade wars. The rules of the game seem to change by the hour.
It highlights how fragile market stability is when it relies on political predictability.
Which leaves us with a big question to chew on. If a Supreme Court ruling can be immediately sidestepped by a new flat tax, does legal precedent actually matter to the markets anymore, or is volatility the only law left?
That is the multi-trillion-dollar question.
Thanks for diving in with us. We'll be watching those NVIDIA numbers closely. Catch you next time.